So you call this shadow easing. I'm reading through, and the drip feed of easing, the sort of behind, under the hood, I guess, types of monetary stimulus looks awfully similar to what we've seen in previous years.
To some degree, that's true. I mean, everybody's waiting for this huge, massive stimulus, sort of the typical interest rate cuts or fiscal injection that we see in the United States, but we're not really getting that. And I'm scratching my head watching all the analyst reports coming out on this. What I'm seeing instead is ways to stimulate the economy without explicitly increasing government debt. And they're doing that mainly through these sort of what I call shadow companies. And the biggest one are these local government financing vehicles. These are these kind of odd, half-state-owned local companies. They're levering up. About 2/3 of the increase of debt to GDP over the past couple of years has come from these thousands of companies spread across China. And therefore, the central government can claim that it's not increasing its debt load because they are very concerned about a financial crisis and a crash in the property market. So they're trying to keep their fingers out of the big stimulus pie.
You call this a political solution to an economic problem. We know that with China, you just have these kind of rolling balls of debt, right? Does this mean the problem of bad debt that we've seen in previous years with NPLs at local banks in particular that have been really most vulnerable is really just going to continue at a localized level?
Exactly, rolling balls. You've got a lot of good metaphors this morning. I like this. Yes, basically, a lot of the debt is going to be stuck with the local banks. It's funny because the state-owned banks actually have about $1 trillion. I think it's $1 trillion worth of capacity to lend, or trillion renminbi, to lend to the property sector. But you notice with the Genro default, they had a credit line with the Bank of China, and the Bank of China apparently didn't give them any money because they defaulted. So even though there's a credit allocation, the state banks are probably being ordered not to lend to the property sector. So instead, you have a lot of local banks, you have some bonds, you have a bunch of local capital. So if there are defaults, they can essentially isolate the problem. I think that's what's going on in their minds. They're saying, okay, we'll let a few provinces suffer because they can handle it. The party officials there will have to figure out how to deal with the unemployment. That's going to be a local problem. As long as we can handle it in that way, then we won't have a systemic national crisis.
Well, Andrew, is there any point where the government acknowledges that it helped create this situation by the way it went about it? I mean, in other words, if you wave a red flag and say, oh, you've got problems and we're not going to help you, and then no one wants to roll over your debt for you, you create contagion. And it seems that the way the government instituted this policy, and they've continued, has been part of the problem. Do they acknowledge that in any way? Would it help if they did?
Well, what is contagion? Contagion is when the national press starts publishing stories like in the United States in the mortgage crisis. You don't have that in China. They control the medium. Contagion is if you have a Wall Street bond run like we did in the United States. They have some of that, but actually a lot of this debt is held by local banks, and therefore nobody really knows what's going on with them. So they can isolate it much more effectively in China than they can elsewhere. If there's massive unemployment, then the local party provincial chief will go to Beijing and they'll say, look, we got a real problem on our hands. And they'll trickle, as you said earlier, somebody said earlier, trickle some money down to try to solve the problem. But you don't have the same transmission mechanisms for systemic contagion that you do in the United States.
So how long till this is done? And is it, and then is it, because it isn't helping the economy, whether it's 25 or 30%, broadly speaking. And so as long as it's weighted down, it's a weight on the entire economy.
Well, you've had a mounting debt problem since for at least a decade since the stimulus in 2009. Now the government's putting a stop to the debt problem. They've been essentially grown GDP through debt. And so their way of solving this could be, yes, what the sell-side economists all want, which is more debt. But that's not going to solve the problem. And Xi Jinping, I think, is very aware of the problem that if they have a systemic national crisis, the whole thing will run away from him, just like his attitude towards COVID in China. So in order to stop that mounting problem, they're trying to allocate capital more wisely and scare the market. And so far, I've been very surprised. Nobody expected the 3 red lines policy that happened a year and a half ago to continue until now, and they're still doing it.
Andrew, we talked about metaphors and analogies, and here's another one that we use a lot for China, whack-a-mole, right? They've got so much to deal with. They've got ring fencing the property meltdown. They've got, zero COVID. We still see downside when it comes to the tech crackdown. What's the policy priority here being such a key political year?
Well, I'm finishing up a book on the tech crackdown. I mean, I think control is the main issue for Xi Jinping. He's running for a third term, or running, whatever they call it in China. And therefore, he wants to make sure that there's no problems on his watch, which would be protests, which would be a huge debt crisis, all that kind of thing. So I think that's it. The second thing is I think that they are very concerned about financial contagion. I think Liu He, some of his top advisors at PBOC, they're all very aware of these issues. And they're really trying to genuinely stop the debt bubble, even though, frankly, ahead of a party election, they would usually flood the market with credit, but they're not doing that. So the whack-a-mole, that's a metaphor. That's a little overused. I wouldn't use that one. But basically, I don't think that they're not whacking moles. They're letting the moles die. They're a death-a-mole, you can call it, in certain provinces, so they don't have any more moles anymore in certain areas.